Hey, this is Awais with eMiniPlayer.net, and this is a recap for Friday, May 31st. So heading into the day, the trade plan discussed a couple of different scenarios. One was that ES could balance in a range, and that was really more of the upside scenario, that if ES heads up, it'll probably be more of a rotational type trade, and we'll see two-sided movement. And then the other scenario that I talked about was a potential liquidation move down to the 25 to 27 support, that if we really start liquidating, we don't really have any decent support until the 25 to 27 area. So we'll need to be cautious of that as well. It was also a Friday and the last day of the month, so that also added a little bit more just risk into the market. So we were heading into the day with a relatively mixed context. We were using the overnight VPOC area as a very short-term bull-bear zone, and then we were just going to try to see if there was any directional conviction in the market after the econ reports were out of the way. All right, let's jump into the charts. So we can see that ES opens below value. We get a push down towards that overnight VPOC area that we were going to use as the short-term bull-bear zone. Responsive buyers are active a little bit ahead of it, and we get this very decent push up to the gap fill and prior VPOC. And this is essentially happening ahead of news. So if you missed this trade, nothing wrong with that. This was a relatively risky play in real time. I mean, internals are pegged near the lows. NYC tick is obviously going to be below zero right off the open. We're opening on a pretty decent gap down. So if you're taking a long setup here, your stop really has to be behind the bull-bear zone, and then you're targeting really this resistance zone over here, right? Now, ahead of the news, after Chicago PMI is out of the way, technically you can take like a scalp type setup on the short side over here, because we had another econ report out at 9 a.m. Central, and the market is likely not going to go directional before all that is out of the way. S&P advanced decline is testing the zero level, first time tick being above zero on a pretty bearish open. Usually at the very minimum it produces a rotation down, so you can take the short down to the midpoint, but unlike Thursday, we're not playing this midpoint bounce on the long side now. And the key difference is that over here you're opening on a pretty decent gap down, and all ES has done has filled the gap and tagged the prior VPOC, right? Whereas on Thursday, we saw some initiative buying, right? ES broke above the prior day's high on a pretty nice momentum move up, right? And that's a pretty distinct difference. They're not the same move, even though on the intraday time frame, it looks very similar. When you zoom out and you think of really what ES has done, all it has done so far is it gapped down and it simply went up and filled the gap. Whereas the day before, it shot up and made new highs. It broke above the prior day's high, which means that there was initiative buyers active in the market. Whereas here, it's a buy response, right? These are responsive buyers, and they're simply responding to these lower prices, right? Opening below value, and then they're going back up and checking the prior day's VPOC. A very different type of move contextually. So this time, when it moves back to the midpoint VWAP area, we're not going to be aggressively buying that setup. We're going to be more conservative and only look for conservative long setups, right? So this is a short scalp type idea. Still a pretty decent move, by the way. Going from 53 down to around the 49, 50 area. So not too bad. Still about 3 points or so that you can get off there. Now, once this comes down and starts testing the opening range, that's where, if you are going to take a long, that's where it makes sense. You can see we have some positive divergence on the tick. We're not really seeing too much momentum on the downside just yet. So, over here or on this retest of the opening range high, it certainly makes sense to trade it from the long side. Internals are kind of stabilizing, right? So this kind of move is definitely something that's worth trading, either from down here, again from the opening range, is ideal because you can define your stop pretty well, right? If you're taking a long here, let's say at 47, your stop can be 44, below this overnight HVN, and that's a very safe stop, right? And it's still 3 points. It's not huge. So, and really, if you wanted, you can make it even a little bit tighter than that. But, you just risk getting stopped out to the tick and then the trade working in your favor. So I prefer using slightly wider stops when, volatility is expanding and not get, just ticked out of a decent trade. And as far as managing risk goes, if you're entering long over here, you're certainly taking profit on any pops back into resistance. The next setup that really showed itself was up here. It didn't quite get to our resistance zone, but the prior day's value area high was 57.75. And, at this point, ES has gone directional from 48.5 up to 58, right? So almost 10 points in a linear fashion, and usually that is unsustainable. And if you look at the breadth, or the market internals, you can see that even though S&P advanced decline is close to plus 200, the NYC advanced decline is still at minus 500. So that's showing you that this move up in ES may only be due to some select large cap companies that are being pushed up, and the broad market is not participating in this move, right? The broad market is not as strong as the S&P is, and this move could be short-lived, or at least it's not going to continue just ripping up to 60 plus, right? So it didn't quite get to our zone. So if you missed it because of that, that's understandable. But I just want to highlight that this is at this point trading at the value area high from yesterday, and usually in order to get sustained movement above the prior day's high or the prior day's value area high, you need to see some pretty strong internals. What we call initiative internals, where the S&P advanced decline is above like positive 250 or 300. The NYC advanced decline is usually close to positive 1,000, and that wasn't the case. And you're also getting this move on very high volume and on a new tick high on the day. So, at this point, it's probably exhausted short term anyway. So, if you're taking a short here, you're targeting at the minimum a pullback down to the prior VPOC and gap area, And in this case, the pullback ended up being a little bit steeper. If you missed it here, then of course, this resistance zone up here is a possible sell as well. But of course, the risk reward is not going to be as good. Location is not as good. But, this is a very good short setup. Now, in real time, this type of stuff looks really scary. When you're taking it, when you're shorting 57s or, any of these prices, in real time, it looks like, this thing's just going to pause and make just another push straight up. But usually that's not how they play out, right? And you have to go with the trade that works majority of the time. And majority of the time, this thing is not going to continue ripping up. It happened once a couple of weeks ago when we were in that weird kind of this, bullish market where there was just this sustained bid in the market. And at that point, I recall, the ES went up, I don't know, something like 14 points or something straight up. And that's pretty rare, right? And we took that setup, right? We shorted it, and we actually ended up adding to our shorts, and we played it. I think we managed it well, but that stuff is pretty rare. Usually 10 points straight up in ES, especially when you look at it within context of yesterday's value area high, non-initiative internals, all that stuff certainly makes sense to short this and look for a move back down to at least the gap and prior VPOC area, and then potentially the broken resistance zone acting as support. So this is a pretty good setup here. We can see that it goes back up, fails again. But the thing I want to highlight here, and something that I posted on Twitter as well, was that after you got this new high and this pullback down to almost the opening range, you'll notice that starting at a little bit before even 10:30, the tick distribution completely changes, right? And this is something I posted about on Twitter and cautioned the buy side that, hey, if you're taking this long, because it's first time down here, this is a potential long setup at 49. It's basically the 24-hour mid right here that it's testing off this, right? And you're getting buyers active at the midpoint from the 24-hour session and getting some rotation. this is good for rotation, right? You can kind of scalp this type of setup, and it has a very high win rate. But when you look at it within context and you see kind of where the momentum is, you can see that, you know, it's mainly below zero. There's really no upside momentum in this. You know, it's spending more time below zero. Not only that, you're making new tick lows, right? I mean, look at the high tick that you got on this high volume bar and this big push up, right? I mean, this is a very decent move up, 10 points straight up. And what does tick do? Positive 620 or something, right? Barely, right around positive 600. But on the downside, when you get pullbacks and you make new tick lows, you're getting more momentum on the downside. Look over here, you're getting negative 1,000 tick readings on this push down, right? Which again, for a scalp type setup, these negative 1,000 tick readings means short-term exhaustion, and it gives you a high odds bounce, at least 2 or 3 points, right? And you can play that. But you have to make note of this stuff and kind of figure out, okay, where is the bigger picture idea, right? And that idea was clearly pointing to more downside to come. And you can see that it goes back up here, test the prior VPOC gap area, and at this point, you know, if you're not short, this is an area where you can get short and look for a move down to you know, the 38.5 to 40.5 support, or you know, the opening range. And again, at the minimum, at least you're not losing money, right? By making notes and looking at the tick distribution, at the minimum, you're being cautious on long side, so you're only taking conservative longs, and then you're not just letting them run against you, right? You're taking profit, you're getting out of that long, you know, trade, and you're managing your risk pretty closely on that long because of noting that, you know, the momentum is clearly on the downside. Now you can see that once we get this break, you know, off of the resistance zone here, back into the opening range, we're making again new tick lows, right? Come back down to that overnight VPOC HVN, get a little bit of rotation there, but again, we're making new tick lows, negative 1,300 on this one. We test that 38.5 to 40.5, get a bounce, right? And I'm sure some people traded this to the long side, which is okay as a short-term trade, but keep the bigger picture idea in mind, right? Look at the internals, and at this point, you can see that, you know, the NYCAD is below minus 1,000 in the afternoon and dropping pretty quickly. The S&P AD is, you know, below minus 200 and looking pretty bad as well. And this pop back up into the opening range, IB low, and that overnight bull bear zone idea is a short setup, because now it looks like that liquidation scenario that we talked about could be in play, right? So if you're not short, again, this shorting this pop is a pretty high odds trade where even if the trade idea is not going to work, it's not going to run you over, you know? It's going to give you some rotation and give you some time to get out of the trade at break even, you know, if the idea is not going to work. But if it works, then it could be a really good trade, right? So again, you know, this is potential long scalp type idea, not really a scalp. I mean, this is a pretty decent bounce. But you know, you could play this based on the fact that we're short-term oversold, right? Negative 1,300, multiple negative 1,300 tick readings into a support zone, kind of a linear move down to support. You can play it for a bounce, but don't lose sight of the bigger picture idea, which is shorting the pop back up to the IB low. And then looking for a move down, not only to here, right? This is going to be a scale out if you want, but really down to that 30.75 support that we had, right? And you can see that over here, once that liquidation starts, there are a lot of trapped buyers. I'll kind of scroll this up and show you the profile from the day. You can see that basically we had built a distribution from 46 to you know, roughly about 53, 54 up here, right? That's where a majority of the volume transacted. And you know, once it started going, once it started liquidating, considering it was a Friday, last day of the month, all that played into it, and you know, we had a lot of trad buyers in the market, right? Everyone who had bought up at these prices was now in a losing position, and that's really what accelerated, I believe, the liquidation move down. And you know, in the trade plan, when I discussed the liquidation idea, I mentioned that we don't really have any decent support until that 25 to 27 zone, which means that you should not be buying this, right? It can be used as a target, if you want to cover short, but we're not trading this to the long side, considering it's the last half hour of the day, end of week, end of month. This is something that we simply do not fade. We usually don't fade moves in the last half an hour anyway, but even more so when it's the end of month, end of week. It just it can get ugly pretty quickly, and that's really how it played out. Once the liquidation started below that overnight HVN, below the 38.5 to 40.5 support, it didn't stop until the 25 to 27 zone. Now this, at this point, you're hitting a pretty decent support zone, right? So if you want to play this as a scalp type idea, you can see that we got a zone to zone move. We would bounce here, go back up here, broken support, acting as resistance. I personally wouldn't even play that, right? It's really not worth it to me because sometimes these moves can continue more than you think. But if you're going to play it to the long side, then do it off the support zone that's pretty solid. Don't do it off of these, support zones in the middle. And that's really what I cautioned about in the morning as well. That, the liquidation move could really go down to 25, 27 before we see any decent bounce. So that worked out pretty well Friday afternoon. But basically, those were really the trades of the day. Early in the morning, it was more of a balance type market. Let's switch over to our 5-minute chart. So early in the session, it's more of a balance session where we're buying support, selling resistance, right? The short is very good for a move down to gap, VPOC, broken resistance acting as support. This is a scalp type idea to the upside. And, after that, once the tick distribution is clearly on the downside, internals are still negative, the broad market is quite weak. At that point, I think it makes sense to start trading this from the short side. And, this is really the best trade location. But even if you didn't get short here, I think shorting initial resistance was very good as well. And again, if you didn't short that, then this bounce back up where you're breaking out from this entire balance from the entire day session, right, is a very high odds setup. Again, even if it's not going to work, it's going to probably give you rotation and let you get out of the trade for break even or a small profit. And those are the type of trades where we do want to be aggressive, where the likelihood of the market just running us over is very, very low. So those were really the trade ideas. The liquidation move worked out pretty well. I hope some of you were able to take advantage of it. Now let's switch over to the bigger picture and see what's happened and talk about what could be happening in the coming week. So ES broke out from this balance area May 14th, right? Built this entire balance up here, spent a lot of time in this range, and now this is the first liquidation move we got down back into this balance. 26 quarter was the high volume node of this balance area, and that's exactly where ES ended up bouncing. So very structured moves, very logical moves that you can prepare for ahead of time, and we did. Now heading into the next week, we have this balance area that ES is going to be working with, where the lows are around 1620. So in the overnight session, if we're holding above 26 quarter, there's potential for ES to bounce up to quite easily to 33 quarter and potentially even around 37 to 40. That's really the decent resistance area above now, around 37 to 40, maybe 36 half to 40 half. It's a little bit wide, it's 4 points, but we're working with a more volatile market right now, so for the overnight session I think that's okay. But I think the first bounce back up to 37 to 40 area will get sold into, and then above that we have very decent resistance around 45 to 48. You have this HVN at 47 quarter, and then on the downside, if we continue selling below 26 quarter, we'll be testing that 19 to 21 support down here, which is basically the bottom of this balance area. In the event that we do sell below that, then it'll bring kind of this original breakout that we got at the beginning of May into play, and those existing support zones below will still be attracting, I believe, responsive buyers in the market. We have a lot of econ data out this week, which can result in just expanded ranges and expanded volatility. And we'll use that obviously to our favor. But this is really how the bigger picture is shaping right now, where I think first time down, these areas will still attract responsive buyers unless there's a bigger picture shift in the underlying sentiment that's at play. Right now, we don't know, and we'll have to wait and see what kind of responses we get. So this is basically support until broken, and we're going to play it that way. And then on the upside, again, the 37 to 40 area, you can see kind of this whole area down here where ES was balancing. That's going to be resistance. Above that, the 45 to 48 is pretty much an automatic sell on first test, and we should get pretty good rotation there as well. So let's see how the overnight session plays out, and then of course I'll provide a new trade plan for Monday morning, and we'll take it from there. Hope everyone did well this week, and hope you are enjoying your weekend, and we'll catch up Monday morning.